Welcome to the HC Insider Podcast, a podcast dedicated to the commodities sector and the people within it. I'm your host, Paul Chapman. Today we're talking lithium. 100 years ago, companies and governments were scrambling to find and produce oil. Now, the lithium-ion battery is transforming economies and forecast to replace the internal combustion engine, and the scramble for lithium is on. Whilst it's abundant, lithium ores that can be economically extracted and turned into high-quality batteries are relatively rare and bless only certain countries, a fact recognized by Chinese battery producers for some time, and with the support of the government, led to securing of supplies over the last decade. What does this mean for Europe, for the US, playing catch-up on their battery supply chains? What does it mean for geopolitics? All of this is discussed in Lukasz Bednarski's book, Lithium, the Global Race for Battery Dominance and the New Energy Revolution. Lukasz has a background as a commodity trader, a background in rare earths, and is now a battery metals analyst. As always, you can really support the show by leaving a review on the podcast platform you're using. That helps promote the show to a new audience and helps us continue to attract great guests. And, as always, I hope you enjoy the episode. Lukasz, welcome to the show.
Thank you, Paul. Thank you for having me here. I'm a big fan of the podcast. You always have interesting guests and great topics, so I hope we can, maintain those standards during this conversation.
Excellent. Well, I know we can. I'm excited to have this discussion. I've just finished your book, Lithium, the Global Race for Battery Dominance and the New Energy Revolution. Two things struck me. Firstly, one was this kind of reads like the first chapters of The Prize, Daniel Yergin's classic book on the rise of the oil industry. Some organizations see the future more clearly and are immediately out trying to vertically integrate and secure supply. Others don't, and other regions don't. And then secondly, the thing that struck me was how recent all this is. We're not talking 20 years ago, we're talking 2-3 years ago in terms of much of the episodes. That's the story we are going to tell. I'd love to, before we dig into the book, just get what made you write this?
I've always been a big bookworm, and I read a lot and across different genres. So it always has been my ambition to write a book. And since I've been working in this industry and following it for a long time, I felt that I'm the best placed to write a book about lithium and, battery economy at large, especially since when I looked at the market, you have authors who write about other commodities, especially oil, in an accessible way for a wider audience. You mentioned Daniel Yergin, who always has been an authority for me in this space. But I haven't seen on the market any book that would tackle the lithium and this new energy revolution that we are experiencing, and which is related to the uptake of the lithium-ion battery in many different industries.
And part of that, in a way, is because a lot of this is not familiar, both in terms of the technology, but also in terms of where the revolution is taking place. This story doesn't, it starts in, ironically enough, Exxon and Oxford University and Japan in terms of the development of the lithium-ion battery and its initial commercialization. But actually, this has been very much a China story, an Asia story, and to some extent a Latin America story. So let's start there. So the future idea of electric mobility was seen very early and seen for very strategic reasons as well as environmental reasons as a real opportunity for China. Can you sort of start there? Because it was a real, compared to even the current US policy on supporting chips, for example, I mean, it pales in significance to compare to what the money the Chinese put into EVs at an early stage.
Yeah, so as you noticed, I wanted to start this story from a different angle. I think we being in the West, we are very Western-centric in the approach. And when we start to talk about lithium-ion battery, we start with, its invention and then, first commercialization in Japan. followed by the success of Tesla. But this is not all of the story. And China, I think, truly developed this battery economy. And it started with Chinese leaders somehow realizing that they are late to many major industries. So they started to bet on developing industries of the future. They still do that, whether it is quantum computing or robotics or, for that matter, battery. And the ambition was to transition from being world's factory to world's high-tech power. So the battery industry, among others, played a central role in that. And by betting on this lithium-ion battery sector presented multifaceted advantages. First of all, environmental, right, but also spurring up the development of the chemical industry and automotive industry. So two big segments of the economy. This, macro perspective, which sort of set of directions. But from the micro perspective, that was also an individual effort of the entrepreneurs, often small entrepreneurs, who tried to capitalize on this wider trend. From this perspective, the battery industry in China really started with the development of e-bikes, which were, popular early on. First, even powered by acid-led batteries, and only then by lithium-ion batteries, which provided enormous performance advantages. And then also the focus became the development of the batteries for fast-growing electronic industry in China, right? So that's what really started this industry in China.
Mm.
Obviously, there were certain challenges. For instance, the lack of capital for entrepreneurs coming from the centrally steered economy, and very often the need to partner with state-owned companies in order to develop something. They were moving very fast, and the industry itself grew very fast
Yeah.
with this kind of spirit.
And there's so much in there, isn't there? Because there was, from an environmental perspective, it was the smogs in Beijing, right? It wasn't the upstream impacts, I should say, of processing and mining a lot of these materials, right? Which is another part of this story. But was it the 863 plan? I mean, there was so much. Initially, they were selling 1,000 units in total of EVs in China. I mean, it took a long time to build up all these capabilities. And again, it's fascinating, isn't it? Because it was a story of private entrepreneurs, and we're going to come on to them next, but against a backdrop of a very long-term planning by the CP.
Yes, I mean, planning really played a major role here. So it was something like an amalgamation of the effort of individual entrepreneurs who were sort of inspired and then backed up with institutional framework, regarding the execution of these wider plans. I think it's interesting to mention that Deng Xiaoping, father of the modern China, at some point he was presented with a letter from four renowned Chinese physicists, which set high-tech development plan for a country at large. And it took Deng only 2 days to accept it. So he really, saw the need for setting China on the road to become a high technology powerhouse. And since it happened in March of 1986, that's where the name of this plan comes from, 863 plan, because Chinese they basically use this calendar in different way than we do. So first the year and then the month. So that was the wider plan. There were also smaller plans, or more granular plans, if you will, dedicated to the development of the battery and the EV sector. The first idea was really to brand China as an electric vehicle power already during the Olympics, but unfortunately they didn't manage to move fast enough with this ambition. I mean, in 2008, electric vehicles sold only in a number of thousand units in China, as you mentioned. And at first the plans were really, really ambitious, because Chinese were thinking that with the state of the technology at the time, they will be able to make 12% of its fleet to run on alternative energy already in 2012. So, from our perspective now, these goals were even comically ambitious.
Mm.
Obviously, that didn't happen. And as they moved forward, then these more granular development plans were introduced. Most famous of them was so-called 10 cities, 1,000 vehicles program.
Mm-hmm.
And it was a very interesting plan because it had a decentralized approach. So, in countries, for instance, like South Korea, which are now high-tech powers, there were also plans, government, steered plans for the development of the high-tech industry. But over there, the approach was more about betting on the national champions. And the Chinese at first, they took a different approach. They basically encourage for the major cities in China, the most technologically developed cities in China, to try to put 1,000 vehicles on the roads by a certain deadline. And so that's why 10 cities, 1,000 vehicles name, right?
Mm.
And the details how they want to move on this plan were left to the municipal powers.
Yeah, I found this
And
fascinating in the book where
yeah,
you had,
yeah,
every different city had a different charging standard, car standard, and all the rest of it. So you could buy your electric vehicle in one city and it just wouldn't work in another. But I guess all this to say that and the story goes on to the point that we're now in the sort of the tipping point of 2019 and on. There was this backdrop of support, and that did mean there was a sense as well with the participants. Two things. Firstly, that the Chinese government wasn't going to allow them to go bankrupt. So that gave investor confidence and at least financing confidence. And secondly, there was this view that ultimately it all came down to lithium. And lithium was the stuff, the new oil that was going to drive this future economy. And China at that point had probably already exhausted the reserves it had of that, and other reserves were in tougher areas like Tibet, in the regions where the Uyghurs are, etc. And you had a couple of these companies see this, very visionary leaders see this very early on and go and secure, and this is kind of the story of the book, right? The gold rush, the getting out there to secure the lithium supplies that would need to be to meet this future lithium ion demand. And you juxtapose how the two famous Chinese companies did this, and with Ganfeng and Zhongqi, versus Albemarle as an example of the different stakeholder drivers they faced. Maybe you can I would love for the audience, just hear the quick potted history.
Yeah, Ganfeng and Tianqi Lithium, two Chinese majors that now still hold the substantial market share, one of the largest lithium companies in the world at the moment. And development of these companies and generally lithium companies in China at large, you can argue that it followed certain model. So very often the people who created these companies, they worked in the state-owned companies before, so that's where they gathered the experience with lithium. And still keeping in mind that at the time when you were getting experience in lithium, you are getting experience in lithium as a chemical which was used in air conditioning or in lubricants, so that kind of industries. But then with the development of this battery economy in early 2000s, really the demand for lithium started to skyrocket. And then some of these people who worked in the state-owned companies with lithium, they took the bold step and they went on their own, often purchasing the assets or at bargain prices from the state and developing them from the ground up. At first, the competition was quite cutthroat. So this was type of the big eat small market, where the companies which were stronger basically acquired the smaller companies in order to get rid of the competition. And then the next step after the chain of acquisitions was to look for the financing, very often abroad. And here the Hong Kong exchange play a role of this window to the world to get more capital to grow even faster. And the second important point in this process of development was to get the mineral resources abroad, because at first Chinese companies were dependent on the lithium resources situated domestically, but they were not really competitive because the extraction was taking place very often in a harsh environment in places as Tibet, for instance. The resources on the purity level were not very attractive, and in the end cost of their extraction was quite high, and in the end they knew that it won't be enough to satisfy the Chinese battery industry needs in the long run. So really, these companies, both Tianqi and Ganfeng, they started to look for mining assets abroad and started to acquire stakes in new projects in different places, in Australia, in Latin America. So that was the model basically.
There's a lot in there, right? Because Chenxi got the crown jewels in Australia of a huge deposit. I think they got 49% of that. There's a little bit of, I guess, chemistry at this point, right? So, and this a little bit weaves in this debate about whether lithium really is a commodity or a specialty chemical, because things like those impurities you mentioned really have an impact on how much processing needs to go on and whether that's economic or not. Can you just why for China is Australia so much better as a source of lithium than, say, in Chile?
Mm. I think Australia is especially attractive for Chinese companies due to two reasons, and they are quite simple. One is the geographical proximity, so you don't really need to spend much on the transportation costs. And in commodity trading, cost of logistics is sometimes everything. It makes or kills the business. And another thing is that in the last years, and I think this is the trend that is likely to stay valid in the future, is that high performance electric vehicles, they need high nickel batteries. And now, in order to produce a high nickel battery, you cannot use the lithium in any form. You need to use lithium in form of the lithium hydroxide. And one of the most economic routes, easiest routes to the production of lithium hydroxide is to take the spodumene concentrate, which Australia at the moment abundantly supplies, and turn it into the lithium hydroxide.
So you've got these organizations out there realizing that actually the access to quality lithium ore is going to be crucial in the future when supplies come tight. And just like in the price and Standard Oil, you also see this vertical integration happening. Can you talk to the drivers behind that?
Yeah, so I see the parallel with Rockefeller Standard Oil, because Rockefeller quickly dominated early oil industry through integration, vertical integration, right, to streamline production and logistic, lower costs, and therefore undercut competition early on. And we can argue that these major Chinese companies followed a very very similar model.
But all of these organizations fundamentally saw the rate limiting factor as access to lithium. Is
Yes,
that right?
absolutely. The
Or
access to lithium was a key, right? Because very often we talk about the China's dominance in battery industry, in the lithium industry. Okay, that's correct, but it's correct on the side of the production of the battery components, battery chemicals, batteries themselves. But you cannot get that without the access to the raw materials. And with raw materials, you need to get lucky. I mean, you cannot just build the mine anywhere, right? First, you need to situate the deposits, and then they are viable for the economic development. Then you start to develop them, and you do not choose where the deposits are. This is something that nature decides about. And China was not lucky in this regard. There are lithium resources in China, but as I already said, they are of not sufficient quality, and it's expensive to extract and to transport them to the places where they can be used. So China became really dependent on the imports of lithium from abroad, and especially Australia and Latin America. So also like the race started really between these Chinese lithium companies, and not only Chinese lithium companies, with among all lithium companies in the world, but perhaps Chinese were the most active because they were the first to realize the importance of this, to go around the world and to acquire maybe not the whole mines, but at least the stakes in the mines, which would give those companies a priority for the offtake agreements, right?
Yeah, one of the things when you start this talking about lithium is you often hear that lithium is the most abundant element, or one of the most abundant elements on the planet. It kind of gives this false notion that it is not a rate limiting factor in battery production. It's more on the chemical processing side and battery creation, which it is, but those take, say, 2 years versus getting a lithium operation mine up and running takes 7. So early on, you had the Chinese companies going out there, recognizing that there was relatively few locales that had the sufficient quantity, the right regulatory background, the right financing background, etc., to make it economically viable to extract. And they were very aggressive in going out and either getting some kind of stake, as you say, some kind of interest in these mines. And it's fascinating to compare, say, Jiangxi with Albemarle, who were driven by the needs to generate returns for their shareholders, right? And the subsequent bind or the contrast those two organizations are in.
Yeah, I mean, that's a long story, but generally, I think that Western stock listed companies, the reason of being is to satisfy the shareholder and to focus on profitability. And there's always enormous pressure on the profitability in the short term. For Chinese companies, it's a little bit different because they also need to keep certain national consideration in mind and the wider national strategy as set by this plan. I mean, if they want to have the access, for instance, to the cheap financing from the state-owned banks and all other forms of the government support on more subtle level.
Yeah, exactly. So let's switch tack. We've looked at China. The sort of the corollary to that is fascinating in how the US and Europe were, I mean, let's just say late to the game, right? You've got the US where the battery, the battery was invented in both those locales, and the Nobel Prizes were handed out a couple of years ago to Whittington and Goodenough and others. And the US that has a long history of mining. I guess the first time we heard of it was when Elon Musk announced that they were going to be mining in, I think, Utah. Can you just tell us a bit about the US story, and then even more fascinating, I feel, is the European story, which put both regions behind the curve?
Mm-hmm. I mean, even if US has Tesla, which played an enormous role in popularizing electric vehicles, in making them sexy and desirable, then if we look at the state of the development of the battery supply chain in the US, it's still in a very nascent stages. You have very little of companies and factories that do the battery materials and battery components there. You have very little mining for minerals used in the battery, especially for lithium. I mean, even if Albemarle, American multinational, is one of the largest lithium companies in the world, there is still only one operated lithium mine in the US, which produces not a significant volume of lithium on the global market. So, really, this battery supply chain is in the infancy in the US. In Europe, the situation is also quite similar. Many of the European automakers in the past were considering battery as a commodity product, a product that should be outsourced for the production in the countries with a cheaper labor inputs. So by that they meant mostly Asia, what actually in the long run provided China with an enormous advantage. And the attitude was more like, okay, let's keep a research and development in Europe. Let's try to invent new things here, but regarding the production, commercial scale production, we will do it in Asia. But somehow I think they missed the two important points. One was the link between R&D and high-tech manufacturing. It's typically important in that industry to have an access to the factory floor and really understand the production process, because this is not easy. And the second thing that they didn't understand was, the material security in Europe. So, the fact that you become dependent on the import of batteries, import of materials for the batteries, and also, the environmental aspect of all of this, meaning that if you ship battery materials and battery components around the world, when you don't have the regionalized battery supply chain, you are increasing the overall CO2 emission levels for this industry, right? And the whole point of this industry is to minimize the CO2 emission levels.
The HC Insider podcast is brought to you by HC Group, a retained search, intelligence and advisory firm focused solely on the global energy and commodity sector. With 6 locations across Asia, Europe and the Americas, and over 50 consultants. To find out more, go to our website, hcgroup.global. There, you can also sign up for our HC Insider content for more interviews and white papers on relevant trends and talent impacts in the commodities world.
Yeah, and you no longer have a choice, right? You don't actually know. There's a bit of a black hole about the environmental destruction. And again, I always want to emphasize, I think there's a difference between greenhouse gas emission and environmental degradation. And not only are, and both things are going on in that lithium supply chain. I mean, it's a very energy intensive process, taking lithium or even concentrate and turning it into lithium hydroxide. You say in the book, it's almost bizarre that we ended up with this circumstance in Germany in particular, where you'd had such a long association between that high-tech manufacturing and R&D and the likes of BMW and so forth. They've been doing this for years on any and everything. And there was even a small lithium battery manufacturer there in the early 2010s. And for some reason, it just didn't happen, right? Do you have any sense of why that was? Did they just not believe in EV? Did they think it was a commodity, not a technology? I just want to dig into that a bit more.
Mm-hmm. Well, I think they didn't realize that, the quality of the battery, meaning that the components that you put into the battery. So really everything, right? Even the small things like the separator, the chemical mix that you use in the cathode, it really decides a battery performance and hence about the performance of the electric vehicle. Before, the key point of focus was the engine, right? And this was determinant of the car performance. And now it's a battery, which is determinant of the car's performance. So somehow they missed that point. And what mattered in the past for these companies was probably just the cost of the battery. And it was always more expensive to produce it in Europe than it was to produce it in Asia.
Yeah. Whereas actually now we know the key thing is battery development, and the one ultimate thing that's holding back EVs seems to be range more than anything. I mean, everything else is fantastic about an EV car. It just comes down to range, and that comes down to battery development and your watt per hours versus kilograms. But that's a slightly different story. Okay, so we're starting to get a sense of, and it's very much now in the zeitgeist, this idea that almost alongside it being analogous to oil 120 years ago, it has the same geopolitical relevance that we started seeing in the 20s and 30s, as people recognized that you were either going to be a buyer of petroleum or a seller of it, and it's much better to be a seller of it from an economic standpoint. But because you're blessed with natural resources of lithium doesn't necessarily mean that you are going to become the next sort of Saudi of lithium, which is a reference to in your book. And that comes up in this lithium triangle of moving to Latin America, Bolivia versus Chile versus Argentina. And that's quite a long story, I know, but could you just give us a snapshot of how the differing fortunes of those states has been affected by not just the quality of their lithium deposits, which in all cases is good and varying degrees large, but it's actually the economic background, the political background, and the environmental backdrop that determines whether those countries have been successful in becoming significant players in the lithium supply chain?
Yeah, so there is this concept of a lithium triangle in Latin America, so Bolivia, Chile, and Argentina. In the past, even these countries thought about creating sort of the OPEC for lithium, but this idea was abandoned. And from these three, Chile is the biggest producer, followed by Argentina. Bolivia produces nothing at the moment, but it has the world's largest lithium resources in the ground. So from that perspective, it's also important. And just to give you a short breakdown of all the issues and opportunities related to each of these countries, Bolivia has been historically facing enormous issues with mining development. In my book, I'm trying to make a point that it was probably related to the many different stakeholders in the Bolivian political landscape who had the influence on the development of these mining projects, but they were not always acknowledged by the investors coming from the outside. And the second major problem was always, in case of the Bolivia, a division of spoils. So in the past, for different companies, it was very difficult to reach a long-lasting agreement with the Bolivian government on how royalties and other profits from mining should be shared. But Bolivia is not a hopeless case. I think they managed to develop the gas resources. So why shouldn't they develop lithium in the future if we look at the really long time horizon? In Chile, it's also interesting because you have only two lithium mining companies in Chile, even if there is a potential to have more. And it's actually difficult for the new players to establish a new mine in Chile. They are typically discouraged from the very start because it's a government who's the owner of lithium deposits, and you cannot really acquire the deposit. It's being leased out to you, and the government who controls also the capacities expansion by approving what maximum capacity expansion is viable under the given circumstances, also taking into the consideration, environmental concerns, which is good if you think about it. But on the other hand, for the private players, it creates a set of challenges. And this control of the government and government agencies over lithium deposits there is also related to the fact that the old legislation is in place, which treats lithium as a strategic resource. One of the major uses of lithium was in the nuclear industry, and this old Chile's legislation is still treating it like that, like the the element that you use mostly in military, which is obviously not true anymore. And for Argentina at the moment, it's considered to be a really mining friendly jurisdiction, also a jurisdiction where this government influence is decentralized, where different lithium bearing provinces governors has a lot to say, and they typically encourage the mining activity as a source of income for the provinces. And on the side of the disadvantages, Chile is a mining country. I mean, it has been a big copper miner for very long. They have experience with that. Argentina, before lithium, wasn't much of a mining country. But maybe because of that, it's also the country which is very much open to the new greenfield projects. And if you look at the inflow of new projects into the Latin America, they mostly choose Argentina for location.
Mm. Mm. Uh, so, and again, this is a crescendo, or this is an ever increasing scramble for lithium. You also in the book talk about India, like there's a country that doesn't have lithium natural resources, but is very clearly looking toward what does the electron future look like for them, and how strategically can they not be disadvantaged by that fact. Can you just talk a little bit about India's plan?
Yes, so India has a very nascent EV market, but due to its size and population, with very big potential, not only in the form of electric vehicles, but in form of widely defined electric mobility, including scooters, bikes, motorcycles, and there is a big support of government for the development of e-mobility, But the problem is that India do not have lithium within its borders. So the government directed basically the free state-owned mining companies to acquire cobalt and lithium resources abroad, because India's government, I think they realize that they have a potential to produce batteries. They have the potential to produce EVs with strong brands as Tata in automotive, but they don't have the resource, right? And they need to get somehow their hands on the lithium. And it has certain geopolitical aspects as well, because it's not only about starting up a new industry, but India is also third largest oil importer in the world, and they would prefer to shed this dependency on oil to some extent. Also, India faces a huge problem with pollution, and the government tries to curb that. So they have these incentives to go really into the electric industry.
Okay, so I think we've painted that narrative that this is, and we're seeing it across at the governmental level, at the corporate level. Suddenly, this recognition of the need to secure these supply chains, and that starts with lithium. I've sat in a number of meetings with the commodity trading community, leaders within that sector, and it's kind of, this is all very well and good, but there's a lot of questions about where and how they will participate in this. What is the commodity trading community's role in lithium, where at the moment it's highly vertically integrated. The economics might even not match up to what they need, because simply you've got this strategic push from governments, from state-owned actors, national champions, and so forth. I'd love to get your take on, how do you see this lithium market developing? Do you see in the future there being a thriving trade in whether it's lithium concentrate, lithium ore, lithium hydroxide, or does it all really ultimately sit at the specialty chemical level, and you're going to see this continued vertical integration and some resistance to standardization?
Mm-hmm. Right. So here we have two different aspects. One is this everlasting question whether lithium is a commodity or whether it's a specialty chemical. And I think it depends on what level we are really talking about. If we talk about lithium on the level of spodumene concentrate, or at the level of lithium carbonate technical grade, as some mines are producing, I would treat it more as a commodity. But when we talk about the specific lithium chemicals, which are used by cathode materials makers, which need to follow strict guidance as they operate with battery manufacturers and with automakers, because obviously the quality of the components used in the battery impacts their performance, impacts their safety. So here this qualification process, especially from the side of automotive industry, is really long. So here we talk about lithium chemicals as a specialty chemicals, I think, especially since different cathode materials makers have different specs that they expect. So they tolerate different levels of impurities.
Mm-hmm.
And that really makes lithium a specialty chemical here. Regarding the evolution of the lithium trading, that's something that really I follow with much of interest, especially since I'm coming from commodity trading background. On one hand, you could say, yeah, in the past, oil was also traded from producers to the consumers directly, and there was no spot market. There were no basically intermediaries, large intermediaries in between. I think it was Mark Rich, late Glencore founder, who started the spot market for oil, right? And here, when we look at lithium, at the moment we also have not so much of the trading activity. In the last 2 years, so I could observe how more and more trading houses become interested in this space. But I think that the quantities that they trade are still relatively small. There is thriving spot market in China, but to my knowledge, is dominated mostly by the Chinese companies. Sometimes, purely focused on trading of lithium and the chemicals, not really typical commodity trading houses that we have in mind. So yeah, I mean, see the prospects here for trading in the long run. I mean, especially because what you need to have to trade any commodity, really, you need to have the fragmented market, right? where you have a lot of buyers and sellers, and then you can navigate the arbitrage opportunities. And I think for lithium chemicals, it starts to exist slowly on the level of the lithium as a commodity. So if we speak about spodumene concentrate, I don't know, maybe as more and more mines will emerge in the future, there will be possibilities for using blending, for instance, to make profits on trade of this concentrate as you do with other metal concentrates, right?
Yeah, and I assume, ultimately this will come down in some part to demand, right? At the moment, you have OEMs, car manufacturers, partnering with battery producers, and those battery producers are partnering, either own the supply or have long-term contracts, because again, that specificity flows all the way up to what the battery that goes into the car. At some point, if demand really outstrips supply, you are going to have it be far better, if you're the one with the lithium, to have an open marketplace where you get the best price for it, not be beholden to a certain set of chemical processes. So I think, much as it did in oil, it will probably, you'll see this develop. And I think the interesting question now is, what if you are a commodity trader, or you are a miner, or whatever it might be, what moves do you need to make so that you're not left out when this becomes a really thriving market in 10 years? And do you have any sense of, just to you are a commodity trader by background, do you see, we've obviously seen the trading houses look into the circular economy, they're well versed in the other battery metals like cobalt. Are you seeing any of them make any moves into lithium to look at to either the specialty chemical or the concentrate level?
Yeah, I think the first thing would be to establish the presence on the market, even if the volumes that you can trade right now are probably not significant, especially for the large trading houses. But I think it's important to be there from the very beginning. What can really stimulate the development of the trade in lithium is also certain development of the standardization of the lithium chemicals. I've already seen such initiatives in China, where Chinese National Lithium Association started to codify what became considered as a standard battery grade. And I'm not sure if this standardization is finished, and especially some of the larger buyers, so larger battery makers, larger EV manufacturers, they will always have this power to dictate the specs that they need and that they want, right? And they don't care probably what's the standard on the market. But we need to remember also that the lithium market is not only created by the demand from EVs. There is also a demand from electronic devices, from other forms of mobility. Of course, in comparison to the automotive applications, it's a small part of the market. But I mean, this is something that you can start with when you start trading.
What, if you're a trading house right now, is there the opportunity for you to participate in on the various spot markets? What sort of concrete things do you think are you seeing the traders start to do, or how can you start to build that foothold?
Yeah, commodity traders are traditionally secretive, right? They don't really reveal much of their strategy. I think the reasonable thing to do right now is to establish the presence on the China's spot market as a party participating in the trades, as a market maker in a sense, because the only real spot market for lithium that you have right now is in China. Most of the industry actually still works on the long-term contracts. So here at the moment the possibilities are limited. On the other hand, spot market is very volatile. The price is very volatile over there, so it provides traders with the profit opportunities. I think also, you have many new entrants into the battery industry, and for these new entrants, it's difficult to get their hands on the battery raw materials. Here, they could also use the traders' help with establishing the logistic network and getting the material at the price that would be more stable, and that would allow for a more stable operation of the company. So the traders in theory could take on the price risks, right? And provide the logistic services to these new players and also limit the risk on the price side and also on the security of supplies side, because we've port bottlenecks in the last months and lockdowns before. The supply chain was not really stable.
But that's why I find it fascinating, this story, and I think your book really encapsulates the. Again, we started off with, my analogy of it's like the first few chapters of The Prize, where there's a recognition of how crucial this material is, and you see the scramble of certain organizations to vertically integrate and to secure supply. And then I imagine there's analogies going forwards from that book on the market development. So, final couple of questions. You end the book talking about battery technology and some efforts there, and you kind of walk away from that chapter feeling like, irrespective, lithium is going to be the key component. And whilst there might be some developments, the solid state stuff that gets knocked around doesn't solve some of the fundamental challenges. You also talk about the future use cases in planes, which I found fascinating. And again, I'll leave readers to pick up a copy of your book to discover all that. Is there, you finished this book, came out last year. What developments have happened since that have continued your thesis or surprised you?
Yeah, I mean, there was it's a very dynamic market, so something happens here every week, and you need to closely watch it, I think, to understand it. But one of the major developments was price skyrocketing, rising close to even 1,000% on the spot market after we went out of the lockdowns, and that was, I think, sort of the surprise for the industry players that it rebounded so quickly. Another, I think, important event, fairly recent one, is Inflation Reduction Act, which was announced not long ago, and I think which has the potential to really spur the development of the US-based supply chain for the batteries. And what else? I think that since the book publication, I've observed more and more investments in Europe by East Asian companies active in this space, mostly South Korean and Chinese. These investments very often follow this model that when you have the major battery plant established in the given European country, soon after, or when you have the announcement of such plant to be established in the given European country, soon enough the producers of the components follow and they establish the cluster for the production of the battery components in this region. So it's very interesting because such companies, I think they will face certain challenges related to the different working culture in different regions, so kind of the similar trajectory to what Western companies were facing when they were coming to Asia. And I think it's more so interesting that some of these players they feel sometimes hesitant about investing in the facilities which has the most important core technologies, because they are a little bit afraid about the know-how spillover and they don't want to lose the edge over European companies, for instance, or Western companies.
It's going back the other way.
Yeah, it's going the other way. And I mean, you cannot patent everything, right? It's sometimes you have this know-how which is difficult to patent, and then you need to protect it.
Yeah.
So that's the issue that some of the East Asian companies are worried about. Yeah, I think that's about it. I was also stunned by the pace of the development, for instance, of the battery supply chain in South Korea. I mean, when everything else was slowing down during COVID and the lockdowns, they were pushing through developing the capacities, and they left Japan far behind. In that sense, they are catching up with China, which is obviously difficult considering China's size. But I think it's fairly interesting how this industry is developing over there.
Yeah. Well, it's a fantastic book. I can recommend to all of our listeners to go out and get their hands on a copy. It's available on Amazon and all good book retailers, I'm sure, published by Hearst & Company. And Lithium, the Global Race for Battery Dominance and the New Energy Revolution. Thank you very much, Lukasz, for coming on the show and sharing your thoughts on it with us.
Thank you for having me, Paul.
Thank you for listening. If you enjoyed this episode and want to support the show, please give us a positive review on Apple Podcasts or Spotify.
To find out more about HC Insider and HC Group,
a search and advisory firm dedicated to the commodity markets, visit our website at www.hcgroup.global. There you can find out more about our services and our offices around the world. There you can also find more content, from interviews to insight pieces to more podcasts focused on the commodity value chains. Thanks again for listening.